Welcome to this explainer on trading terminology and what we're calling the Rashomon effect of the markets. If you've ever stared at a chart and felt completely, utterly overwhelmed by the sheer amount of jargon thrown around out there, well, you are definitely not alone. Today, we're stripping away the noise, the fancy labels, and the complex theories to discover the market's true, singular driver. Get ready because what we cover today might just completely change how you look at a price chart forever. Let's get into it. Okay, let's dive right into this. You start learning to trade, and almost immediately you hit a massive wall. You learn one method, and then you discover like 10 others claiming to be the absolute real secret to profitability, right? Is it a level of support? Is it an order block? A demand zone? It breeds this intense frustration and, honestly, a lot of imposter syndrome. You might sit there thinking, wait, am I losing my trades just because I don't know the correct terms? Everyone online is arguing over who is actually right, and frankly, it is exhausting. But what if they're all just aggressively agreeing with each other without even realizing it? Notice the visual chaos here. What is truly wild is that every single one of those brightly colored tags is pointing at the exact same cluster of pixels. I mean, it's the exact same historical price action. Yet, depending entirely on the lens the trader is wearing, it gets labeled completely differently. It's fascinating, and maybe a little absurd, that different traders are pointing at the exact same spot on a chart, arguing passionately on forums over what to call it, and totally missing the forest for the trees. Just look at how this breaks down across the industry. A price action trader confidently screams support. A supply and demand trader calls it a demand zone. Smart money concepts traders label it an order block. Wyckoff practitioners see a phase of accumulation. Volume profile users pinpoint a high volume node. And Fibonacci traders, they draw a line at the 61.8% retracement. We are relentlessly bombarded with these terms. Trying to master all these different methods often just leads to a massive headache and even more confusion. So the crucial point is, the market itself is completely, entirely unaware of our human-made terminology. The market doesn't wake up and say, oh, hey, I just hit an order block, I better reverse. It doesn't know who Richard Wyckoff is, and it certainly doesn't care about the golden ratio. These are all just mental models we humans built to make sense of the chaos. The actual market reality, it's purely behavioral. It only moves when, at a specific moment, there are more willing buyers than sellers. That is literally it, buying power versus selling pressure. If we strip away the fancy names for just a second, what is the actual physical phenomenon taking place in that zone? Well, price dropped, and then it bounced multiple times. High trading volume suddenly emerged right there. Ultimately, the market simply refused to drop any deeper. Underneath all the competing trading schools and expensive courses, every single methodology is ultimately trying to answer just one core question. Where is the cash flow likely to appear next? And this brilliantly illustrates what is actually happening. Traders are standing on the same island. They all have different, glowing, incredibly complex holographic maps, and they're speaking completely different analytical languages. But look at what those glowing lines are pointing to. They are all zeroing in on the exact same treasure chest. Just like scientists from different fields studying the same object using their own specialized jargon, all these traders, no matter what they call themselves, are hunting the exact same cash flow. This brings us to a harsh but really liberating truth, especially if you've ever debated whether Wyckoff is better than smart money. Here's the reality. Knowing a complex, trendy term will not save a bad trade. Names do not create profit. The market doesn't compensate you for having a fancy vocabulary. The market solely pays for better decisions and strict risk management. Honestly, you could call a level a magical bouncing floor for all the market cares, just as long as you execute your trade well. Let's look at how this plays out in practice, because this right here is where money is made or lost. Here is a stark contrast in behavior. Trader 1 spots a zone, slaps a support label on it, and buys blindly simply because the label implies it should hold. Trader 2 sees the same zone but waits. They wait to observe if actual real-time buying pressure appears when the price gets there. Trader 1 loses money trusting a label because, an order block or support line can easily fail. Trader 2 wins by observing actual market reactions. Let's move to a real-world analogy to see how this builds, just to really anchor the concept. Imagine a rainstorm. A physicist looks at it and explains the phenomenon using atmospheric pressure. A meteorologist looks at the exact same storm and sees a complex low-pressure weather system. But the farmer looks up, feels the drops on their face, and simply says, it's raining. 3 entirely different vocabularies, 3 different levels of complexity, describing the exact same everyday event. Now, connect that rain analogy directly back to your trading. The price action trader is our farmer, the smart money trader is our meteorologist. But at the end of the day, whether you use complex terminology or super simple logic, it is all just rain. In trading, it is all just the interaction between buyers and sellers. Once you truly internalize this, you stop wasting your precious energy arguing over labels, and you start focusing on whether a zone will actually attract real money. I really want this realization to fully sink in. The market doesn't care what you call it. It only cares if there are enough people willing to buy or sell. Making this shift in your mindset, it's incredibly powerful. It transitions you from being a stressed out jargon collector to becoming a true objective market observer. You detach from the ego of needing to be right about a specific term, and you align yourself with the raw reality of price movement. So as we wrap up this explainer, I want to leave you with one vital mic drop question. The next time you open your charts, right before you place a trade, look at that beautifully drawn rectangle. Stop asking yourself, is this a valid order block? Instead, ask yourself the only question that truly matters. Does my chosen price zone actually attract cash flow right now? Think about that. Base your trades on real behavior, not mere terminology. Keep analyzing, keep learning, and I'll catch you in the next one.